Welcome. In this video, has ZBCN coin broken the short-term downtrend? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking at the chart as a whole, a short-term downtrend line is evident. This trend was acting as a resistance, continuing the downward movement of the price from its previous highs. The price had touched this trend line on every bullish attempt and continued to form new lows after being rejected from these levels. Recently, however, this picture has started to change, especially with the recent price action. A breakout occurred above this descending trend line. This breakout marks a very critical development in terms of technical analysis, because an upside breakout of the downtrend may indicate that a transformation in the market structure has begun, and the previous suppressive structure is no longer valid. Such short-term trend breaks often signal a shift in market dynamics. A previously seller-dominated structure may now be giving way to a more buyer-dominated setup. Candle closes following this breakout in particular suggest that price has now taken this descending line behind it and is trying to hold above it. Technically, when a trend is broken, more often than not, the price makes a retest move back to that trend line. This is a natural market behavior where the price tests the area it has broken to see if it will now become support. In the current situation, we see a similar pattern. After crossing the downtrend upwards, the price is pulling back towards this broken trend line. While this retracement may superficially look like a correction, it is actually an extremely valuable technical development. This is because the price now has the potential to turn this trend line, which previously worked as resistance, into support. If a strong hold on this line materializes, this is referred to by technical analysts as a breakout plus retest, and is considered a highly reliable turn signal. The retest process is often important for market participants as well. For buyers who were unable to enter a position at the breakout, this pullback is an opportunity, because the possibility of the price reacting upwards again from a lower level can increase potential gains while minimizing risk. At the same time, this area could be the last line of defense for sellers. If buyers strongly defend this trend line and the price rebounds from here, this could be interpreted as a strong signal that the market structure has completely changed. In this kind of structure, volume analysis is also of great importance. If there was an increase in trading volume during the trend breakout, and the volume is relatively lower during the retest, this indicates that the breakout was not fake, and the market is taking this level seriously. On the contrary, if the breakout occurred on low volume and high selling volumes were observed during the retest, this may lead investors to be cautious. However, in the current structure, the retest looks quite healthy. The price is slowly retracing towards this level without rushing and panicking, which is technically quite positive. If the retest after the trend break is successful, the price can be expected to regain upward momentum. In this case, the first targets would be the previous highs. The levels where the price was rejected before the breakout are now potential target zones. If these areas are also breached, a stronger bullish wave could be triggered. Therefore, the current retest should be considered not only as a short-term correction, but also as a structure that can form the basis for a larger uptrend. But we cannot decide the analysis only with trends. Let's look at other metrics. Stay tuned. Analyzing the chart from a technical perspective, we see that the short-term price structure is shaped according to the Elliott wave theory. According to this theory, market movements follow a 5-wave impulse structure, followed by a 3-wave correction structure. The pattern we are currently observing shows that the third wave of this 5-wave impulse structure is starting to become active. Especially assuming that the first and second waves have been completed, it is possible to say that the current uptrend is in a very critical phase. We should follow it carefully. The third wave is usually the part of the Elliott theory where the strongest and most aggressive price movements are observed. This wave often coincides with a period of heightened investor and trader interest in the market, positive news flow, and clear buy signals from technical indicators. For this reason, third waves are often characterized by sharp and sudden rises. Many professional analysts and traders even refer to the third wave as the explosion zone. This is because the first wave is usually a rally that few in the market have noticed yet. The second wave creates fear by correcting, but by the time the third wave arrives, most participants want to get on the train. From a technical point of view, the target levels of the third wave can be calculated quite clearly with Fibonacci expansion levels. In this context, the minimum target is usually considered to be the Fibonacci expansion level of 1618. However, depending on market strength and momentum, this level may often be insufficient. In a stronger third wave structure, the target level could be extended to 272 or 2618. This suggests that the price could move considerably higher from current levels and potentially new highs could be on the agenda. Looking at the current price structure, we see that the first wave ended with a clear upward move, and the second wave that followed was more of a corrective nature. During this corrective wave, the price dipped to around the Fibonacci retracement levels of 0,618 or 0,786, only to be met with a strong buyer response. This can be interpreted as a very strong technical signal that the second wave is over and the third wave has begun. One of the characteristic features of the third wave is its sudden acceleration. This wave usually rises at a fairly steep angle and usually doesn't make many retracements. Therefore, when such a wave starts, often late market participants may not get the opportunity or may have to buy at higher risk points. This means that the third wave can also be a volumetric explosion. This is because buyers become aggressive, selling subsides, and the price bounces upwards. When determining the target levels that the price may reach during the third wave, not only Fibonacci expansions, but also previous peak-trough structures, volume profile, and past support resistance levels should be taken into account. In particular, if the 1,618 and 2,272 expansion levels coincide with past price action, these levels may stand out as stronger target zones. In this case, investors should consider profit realization at these levels. Another thing to watch out for is short-term consolidation in the middle of the third wave. This wave does not go up in a straight line, but continues its path with small pullbacks from time to time. These pullbacks can create opportunities to reposition, especially for short-term traders. However, it should be remembered that the main trend is up, and these minor corrections are, for the most part, natural parts of a healthy uptrend. In conclusion, according to the short-term Elliott wave structure, price action is currently in the third wave phase. This wave has a high potential to be both the longest and one of the strongest uptrends in theory, while the 1,618 Fibonacci expansion level stands out as the minimum target. This target could be moved to 2,272 or higher in a strong market structure. The MACD, one of the indicators that many traders pay particular attention to when evaluating the markets under technical analysis, is currently showing a very positive picture. The MACD is a highly effective indicator in determining the momentum and strength of the trend in the market, and its interaction with the zero line in particular can give strong clues about the future direction of the price. At the moment, observation on the chart clearly shows that the MACD lines are moving above the zero level. This development can be interpreted as a signal of a serious technical transformation. First of all, the MACD lines breaking above the zero level shows that the market momentum is now developing in a positive direction and buyers are starting to take control. When the MACD is below the zero line, the market is usually in a downtrend or at least weakly bullish. However, when the MACD lines cross this critical threshold to the upside, we usually enter a phase where the trend strengthens and the bullish bias solidifies. This suggests that the current uptrend may not just be a temporary bounce, but potentially the start of a longer-lasting trend. While such a MACD crossover into positive territory is often seen as a delayed signal, this does not diminish its value. On the contrary, for traders looking for less risky positions, such MACD crossovers signal the safe zones of confirmed and confirmed trends. So traders looking for less aggressive but safer trades may prefer to open positions after the MACD breaks the zero line upwards. In this context, the current technical breakout suggests that the market may continue its uptrend on a more solid footing. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.